Gabriel Stein is a director at Lombard Street Research, joins me now. So I want to start by talking about your overall scenario, your overall forecast, if you like. You're saying that within Europe it's important to distinguish between short-term measures and long-term solutions that can be undertaken. What exactly do you mean by that?
Well, the short-term measures are the support for government bond markets, the attempts to come to grips with the fiscal issues, the ECB potentially stepping in as a buyer of last resort and so on. They are important, but what's much more important is the long-term problems afflicting a number of the countries in the euro area, notably the Mediterranean ones, and that is their uncompetitiveness and their lack of growth. And of course we're focused today on places like Greece and Portugal, but if you look at a country like Italy, the Italian economy's trend growth rate, it's if you want long-term normal growth rate, is practically nil. Okay, that's a real problem,
right.
And that has to be addressed, and that almost certainly cannot be addressed as long as they are in the euro.
So solutions like, say, boosting the EFSF or the European Central Bank morphing into a lender of last resort, those are short-term solutions that
That's
ultimately
right.
don't resolve the deeper structural problems.
That's right,
so
absolutely.
What then do you expect will happen? How do you deal with these underlying growth issues?
Well, ultimately, I think these countries have to leave the euro area because they need to recapture their competitiveness. And since they cannot do it as long as they're in the euro, they have to leave the euro and devalue. Now that in itself, again, a devaluation is not enough. I mean, if I look at my own home country, Sweden, we tended to devalue every decade in the 20th century, then live it up and need to devalue 10 years later. But it can help you freeing up the economy, freeing up labour markets. For instance, Spain badly needs that. Greece needs to boost its tax collection and so on. But all these things will only work if the economy is growing. And it can't do that as long as they cannot compete. And they have to be out. And remember one thing, I know I'm interrupting you here, but remember one thing. EMU is a political project. Germany wants these countries out, really, in order to deepen the integration with the remaining countries.
Okay, so you made a number of comments there. The monetary union would survive, though, if there was
Yes.
closer fiscal union. And we
Absolutely.
are now getting reports trickling out throughout the weekend that essentially there could be talks underway for there to be bilateral agreements for greater budgetary discipline. So that would essentially, if we were to see that, then your scenario wouldn't play out.
No, I'm afraid I think it still would, partly because the fiscal union, if it involves, as it will, the German voter taxpayer and the Finnish and Dutch and Austrian and so on being prepared to shell out forever and ever for Greece, Portugal and Italy, they will not accept that. The fiscal union is a necessary but not sufficient condition for euro survival. But it is also, I think, totally unacceptable to the payer countries as long as it involves the Club Med countries.
Yeah, so there are clearly some political obstacles there. If we look at the more immediate problems, what is it going to take for the ECB to become the lender of last resort? Is that something that you think is likely to happen later this year, early next year?
I think so, partly because I hope so, which is wishful thinking is a bad reason. But what would trigger it, to my mind, is if euro area government bond markets implode. In other words, if governments cannot place bond loans, cannot roll over debt except at extremely high interest rates, as is already beginning to happen. And you know, if you get to a stage where that is the norm of the day, where, say, Italian bond yields go above 8 or whatever, I think the ECB eventually would be forced to step in. And the strange thing is that the ECB will, by its current intransigence, have created the situation where it is ultimately forced to do what it doesn't want to do.
The IMF has denied reports that there are any talks underway for a credit line for Italy. The reports that appeared in Italy's newspapers said that they may be preparing a loan of as much as 600 billion euros. And I suppose this raises the question of how much money the IMF has left in its war chest and whether or not it can be relied upon to help a large Eurozone country.
I think the IMF can create money to some extent, or it can get more money from its members at a price. So they could probably raise whatever money they need. But again, you run up against the politics. Why would a number of the world's poorer countries be prepared to pay up money to help Italy, which after all is a very rich country, and which to a great extent has itself to blame for the situation in which it is. So, you know, it might happen. I venture to guess that all these reports are to some extent true. That is to say, the Italians are exploring, and so they are right, and the IMF is saying there's nothing firm, so they are right.
Gabriel, you seem to me pretty much long-term, when you look at the long-term view, you are bearish when it comes to Europe. You're basically, you're saying that we will see some sort of breakup of the euro area, but then, you know, the counter-argument to that is that it isn't just, you know, you're saying that Germany wants to see these smaller countries leave. Germany has reaped economic gains from the euro, right? From the currency being low, that's boosted their export-led recovery, and there would be consequences for these core countries if we were to see a breakup of the structure. Will Germany not do what it takes to keep the euro together despite the opposition of the electorate, despite public opposition? Will the leaders perhaps take decisive action?
I'm sure they would like to, but we haven't really seen much leadership in the euro area. And what is political leadership? What is statesmanship? It really very much is to say, I'm going to do this because it is right, and the voters may not like it. Well, they'll tell me that, and they'll kick me out at the next election. We're not seeing that kind of behavior from Angela Merkel. We might from Nicolas Sarkozy, strangely enough. And you say Germany has benefited. Now, that's true. But if we assume that the Club Med countries leave, they will devalue, so Germany will lose some of its competitiveness vis-à-vis them. But on the other hand, they will grow faster, and that means that they will also buy more German exports. I haven't done the calculations, which is more important, but it seems to me that Germany benefits more from having strong growth in southern Europe than from handing over cash all the time.
All right, Gabriel Stein, Director at Lombard Street Research. Good to get your perspective.
Thank you very much.
Thank you for coming in.